Hello everyone, welcome to the market opening bell on January 15th, Thursday, your 10-minute guide to the stock market. China's foreign trade data performed impressively with Hong Kong stocks rising, led by Alibaba. The Hang Seng Index opened 123 points higher and expanded its gains, once rising 249 points to a high of 27,097. In the afternoon, after the Shanghai, Shenzhen and Beijing stock exchanges announced an increase in the margin financing ratio, raising the minimum margin ratio for investors' margin purchases from 80% to 100%. The Hang Seng Index briefly fell 68 points to 26,780. For the full day, it rose 151 points or 0.6%, closing at 26,999. The H-share index rose 30 points or 0.3%, closing at 9,315 points. The Hang Seng Tech Index rose 38 points or 0.7%, closing at 5,908. Total market turnover increased to 340.3 billion Hong Kong dollars. Southbound funds net bought $2.865 billion in Hong Kong stocks. Among them, net buys include Tencent at 2.009 billion, Alibaba Health 1.458 billion, Alibaba 1.134 billion, Kuaishou 441 million, Sinuk 119 million. Net sales include China Mobile at 913 million, Xiaomi to 423 million, XTelPai 308 million, SMIC 242 million, Meituan 123 million. According to statistics, Southbound funds have net bought Tencent for 6 consecutive days, totaling 9.007 billion Hong Kong dollars. Net bought Kuaishou for 4 consecutive days, totaling 3.533 billion. Net bought Alibaba for 3 consecutive days, totaling 2.408 billion. Net sold China Mobile for the 8th consecutive day, totaling 6.197 billion. Net sold Meituan for 5 consecutive days, totaling 1.29 billion. Technically, the Hang Seng Index appears to be forming another ascending flag pattern, preparing to challenge 27,200 and even the high of 27,381. The 20-day moving average at 26,036 points is about to cross above the 50-day line and the 100-day line, forming a golden cross, while the moving averages are returning to good order. The 3 major A-share indexes rose steadily in the morning session but diverged in the afternoon. Turnover on the Shanghai and Shenzhen markets further increased to over 3.9 trillion yuan, breaking records again. The Shanghai Composite Index fell 12 points or 0.3% for the day, closing at 4,126. The Shenzhen Component Index rose 79 points or 0.6%, closing at 14,248. The Chinex Index rose 27 points or 0.8%, closing at 3,349. The renminbi central parity rate was softer at 7.012 per US dollar, down 17 pips from the previous day, ending a 3-day streak of gains. China's customs statistics showed that in December last year, exports grew 6.6% year-on-year to, in US dollar terms, not only higher than November's 5.9%, but also far exceeding the market's expected 3.1% growth. Imports grew 5.7% year-on-year, also far exceeding the market's expected 0.9% growth, marking the fastest pace since September 2005. The trade surplus was 114.14 billion US dollars, close to the expected 114.35 billion. For the full year 2025, total imports and exports exceeded 45 trillion yuan for the first time, up 3.8% year-on-year. The cumulative annual trade surplus was about 1.2 trillion US dollars, a record high. Affected by tariff policies, China's exports to the US plummeted about 30% in December and fell about 20% for the full year. Growth in exports to ASEAN, the EU and countries along the Belt and Road offset the gap in the US market, showing that China's foreign trade successfully shifted to non-US markets such as Southeast Asia, Africa, Latin America, and Europe, maintaining overall export momentum. The faster-than-expected import growth in December reflects domestic manufacturing shifts and the AI investment boom, such as AI companies doubling overseas orders, driving demand for key components and energy purchases. In the Hong Kong stock market, Alibaba has continued to surge recently, driven not only by the overall rally in AI concepts but also by the expected continued acceleration of Alibaba's Cloud's revenue growth in the coming quarters. Analysts predict Alibaba Cloud's year-on-year revenue growth could accelerate to over 35% higher than the previous quarter's 34%, and potentially further accelerate to 40% in fiscal 2027. Media reports state that Alibaba Cloud aims to capture 80% of China's AI cloud market increment in 2026. Additionally, reports indicate that Tongyi Qianwen has over 100 million monthly active users, and notably, the Tongyi app product launch will be held today at 10 a.m., witnessing how AI ushers in the era of getting things done. CK Infrastructure stated that the consortium led by the group for the sale of UK rail vehicle leasing company, UK Rails, has been approved by the UK's Competition and Markets Authority, with the transaction expected to complete within this month. Currently, UK Rails is 65% held by CK Infrastructure, 20% by CK, 10% by Power Assets, and 5% by CK Hutchison. Group Chairman Victor Lee has said that this transaction will allow the joint venture to unlock the potential value of the asset sale. He also noted that the group has always disliked borrowing, so it often reserved funds for larger transactions. Following Wuxi EPTEC, Wuxi XDC also issued a profit alert, expecting adjusted net profit for 2025 to grow over 45% compared to 2024. Excluding exchange rate impacts, expected growth exceeds 65%. Net profit is expected to grow over 38%. For the year, revenue is expected to grow over 45% from the previous year. Gross profit growth exceeds 70%, with gross profit margin outpacing revenue growth, reflecting effective optimization of the group's product service profitability and cost control capabilities. U.S. stocks fell, with tech and bank stocks declining. The fear index fixed rose 1.8 points, or 11.1% to 17.8. The Dow once fell as much as 340 points, closing down 42 points at 49,149. The Nasdaq closed at 23,471, down 238 points, or 1%. The S&P 500 closed at 6,926, down 37 points, or 0.5%. The Nasdaq Golden Dragon China Index, reflecting Chinese concept stocks, fell 18 points, or 0.2% to 7,856. Among them, Alibaba ADR rose 1.8%. Pinduoduo fell nearly 4%. Trip.com fell over 17% as CCTV reported that Trip.com Group is suspected of market monopoly and has been investigated by the State Administration for Market Regulation. Among heavyweight tech stocks, Amazon fell 2.4%, the largest decliner in the Dow. Microsoft fell 2.4%, Nvidia dropped 1.44%. The US has officially greenlit sales of H200 chips to China, with the chips to be verified for AI performance by third-party labs before export to China, and sales to China not exceeding half the quantity sold to US customers. Nvidia must prove sufficient H200 chip supply in the US. Chinese clients must implement adequate security measures, and the chips cannot be used for military purposes. However, reports indicate that Chinese customs authorities have been notified not to allow Nvidia's H200 AI chips into China, and local tech companies were summoned by the Chinese government on the 13th, explicitly instructed not to purchase the chips unless necessary, with officials using strong language as essentially meaning a current import ban. Tesla fell 1.8%, Apple dropped 0.4%. Preliminary data from IDC shows that global smartphone shipments grew 2.3% year-on-year to 336 million units in Q4 2025. Despite memory chip shortages, the market grew due to continued expansion in premium models, strong momentum in foldables, and consumers upgrading early in anticipation of price hikes. For the full year, global smartphone shipments reached 1.26 billion units, up 1.9% year-on-year. Apple and Samsung were the two strongest growers among the top 5 vendors last year, with year-on-year growth of 6.3% and 7.9% respectively. Apple held the global top spot for the third consecutive year and achieved a record high shipment of 248 million units, with the iPhone 17 series success in China, capturing 19.7% market share. Samsung shipped 241 million units with 19.1% share. Together, their market share rose to 39%, reflecting the global trend of consumers upgrading to premium models. As the market shifts overall to higher price points, most vendors remain under pressure. Xiaomi, Vivo, and Oppo maintained relatively stable market positions last year, but saw slight share declines. ITC notes that in 2025, China's smartphone market top 3 by shipments were Huawei, Apple, and Vivo, with annual shipments of about 285 million units, down 0.6% year-on-year. For Q4 alone, shipments were about 75.78 million units, down 0.8% year-on-year, with Apple, Vivo, and Oppo ranking top 3. Facing expected sharp rises in memory prices, phone vendors' cost pressures will intensify, and the industry expects a more noticeable decline in China's smartphone shipments in 2026. IDC states that while 2025 was a positive year for the smartphone industry, 2026 market environment will be markedly different. The current unprecedented memory chip shortage is expected to cause market contraction, with the duration of the shortage directly determining the extent of the shrinkage. At this stage, vendor scale and supply chain control will become crucial, with leading vendors better positioned for stable supply and relatively controllable costs. Even with shipment pressures, average selling prices are expected to continue rising due to cost increases. Wells Fargo Q4 profit missed expectations, with shares falling 4.6%. Citigroup and Bank of America shares fell 3.3% and 3.7% respectively. Citigroup reported Q4 results exceeding expectations, with adjusted EPS of $1.18, above the expected $1.67. Adjusted revenue rose 8% year-on-year to $21 billion, above the expected $20.7 billion. The company said that due to a $1.1 billion after-tax loss from divesting Citigroup's Russia business, quarterly profit fell 13% year-on-year to $2.47 billion, or $1.19 per share. Excluding this expense, profit was $3.6 billion, or $1.18 per share. Provision for bad loans were $2.2 billion, about $330 million below expectations. Bank of America reported that, boosted by growth in net interest income and equity trading, Q4 profit last year rose 12% year-on-year to $7.6 billion, or $0.98 per share, slightly above the market's expected $0.96. Revenue rose 7.1% to $28.53 billion, also beating the expected $27 $5.94 billion. Net interest income grew 9.7% to $15.92 billion. Equity trading revenue rose 23% to $2.02 billion, above expectations. Fixed income trading revenue rose slightly, 1.5% to $2.52 billion, below expectations. Bank of America noted that with consumers and businesses showing resilience and a clearer regulatory environment, tax and trade policies, it expects further U.S. economic growth in the coming year and remains optimistic about the outlook. In November 2025, U.S. retail and food services sales monthly growth rate was 0.6%, rebounding from October's revised 0.1% decline and above the market's expected 0.4% increase. Year-on-year growth was 3.3%. The U.S. seasonally adjusted PPI, Producer Price Index, for November rose 0.2% month-on-month, accelerating from October's 0.1%, in line with market expectations. The core PPI, excluding food and energy, was flat month-on-month, sharply slowing from October's 0.3% increase, below the market's expected 0.2%. Year-on-year and unadjusted overall producer price inflation rose from 2.8% to 3%, exceeding the market's expected 2.7%. Core producer price inflation also edged up from 2.9% to 3%, likewise above the expected 2.7%. The Federal Reserve's Beige Book Economic Survey report stated that recent employment has remained generally stable with moderate wage growth. In banking, conditions were generally stable or improved, with increased demand for credit cards, home equity loans, and commercial loans. The report noted that tariffs continue to bring cost pressure, and some businesses that initially absorbed tariff-related costs are now passing them on to customers as pre-tariff inventories deplete or margin pressures intensify. Authorities indicated a slightly optimistic outlook for future economic activity, with most expecting mild to moderate growth in the coming months. Spot silver briefly broke above the $90 mark in early trading amid ongoing geopolitical and economic uncertainties. Market participants maintain a bullish view on this safe haven metal. Boosted by silver prices, silver's total market cap has surpassed $5 trillion for the first time, overtaking Nvidia to become the world's second largest asset. Gold leads with the $32.162 trillion market cap, while chip giant Nvidia slips to third with $4.523 trillion. Analysts expected silver's upward momentum to continue into 2026 as overall bullish factors remain solid, and given silver's smaller market size, its price volatility is amplified by the macroeconomic factors driving gold investments, making a three-digit peak seem very likely. With the US and Iran exchanging threats, oil prices rose for the fifth consecutive trading day. NYMEX February crude rose $0.3 or 0.5% to $61.45. Brent March crude rose 0.4% or 0.6%, $0.4 or 0.6% to $65.87. Our stock pick today is Ping An Good Doctor, stock code 1833. Ping An Good Doctor has recently risen along with other AI medical concept stocks. Yesterday, it reached a high of $18.79, the highest level since October 2nd last year. The current rally in AI medical concept stock is driven on one hand by data from Ant Group's AI health assistant, Ant Afu, which achieved over 30 million monthly active users in a short period after launch, with daily query volume exceeding 10 million, validating the enormous demand in the health AI sector. At the same time, following Ant Afu, OpenAI officially launched its health feature, ChatGPT Health, on January 8th, signaling that an increasing number of top global AI companies are optimistic about the health AI sector. Ping An Good Doctor continues to deepen its AI capability building. Through the deep application of AI technology, the quality and efficiency of its professional medical services have been significantly improved. The accuracy rate of MDT, multidisciplinary consultation, treatment plans for complex diseases has further increased to nearly 90%, and it has helped reduce the per-user service cost for family doctors by about 52% year-on-year. In the future, the group will continue to expand the application of AI technology in various complex disease types and business scenarios, supporting upgrades in medical service efficiency and quality. According to Frost & Sullivan's forecast, the scale of China's AI plus medical market is expected to grow from 8.8 billion yuan in 2023 to 315.7 billion yuan in 2033, with a compound annual growth rate of 43.1% over the decade. On the other hand, the group is continuously deepening its medical insurance synergy model and sustaining its focus on the insurance plus medical care membership model. In collaboration with China Ping An Insurance Group, it is jointly developing commercial insurance plus health protection entrustment plus medical health services products, accelerating expansion into enterprise clients and providing comprehensive coverage, high-quality services, and cost-effective employee health management service systems. In the first 3 quarters of 2025, the cumulative number of enterprise clients served exceeded 4,500, with the number of BN paying users growing 30.6% compared to the same period last year. Looking ahead, the group will continue to strengthen its synergy with the Ping An Group and promote the digitalization and AIization of core services. Through a more integrated and cohesive experience, it will enhance user reputation and satisfaction, thereby promoting the consumption conversion of health protection entrustment services. Recommended buy price $18, target $20, stop loss $17. I do not hold the above stock.